Stephen Eliscu from DMG Blockchain Solutions Incorporated.
Thank you. Today I'm going to tell you about DMG. We're a Bitcoin miner, but a whole lot more. So let's get into it. But first, I want to caution you, we will be making forward-looking statements today. Please download the presentation from our website. Please download the presentation from our website and read it carefully. So when we look at DMG, when we think about what we can do with Bitcoin, there's mining the Bitcoin. And you probably know of a whole lot of Bitcoin miners. It's a pretty straightforward business. You have compute and energy, and that generates Bitcoin. And depending on your input costs, that will determine your margins. The math is really straightforward. But when we look at the longer term opportunity, it's not just about making the Bitcoin, but it's what happens after the Bitcoin is made, monetizing Bitcoin transactions. And ultimately, our vision is really to give financial institutions a choice to be able to send Bitcoin in a carbon neutral way that meets their ESG charter as well as their regulatory compliance rules. And by doing this, we feel we can create much more value as a company. So let's just go through some bits about the company. We were founded in 2016. Sheldon Bennett, who joined me here, our CEO, founded DMG about 8 years ago now. We went public through an RTO in February of 2018. We also acquired a company called Blockseer in Silicon Valley that gave us our software and services DNA. We're a liquid stock. We trade about 1 million shares a day. And in terms of our financials, last quarter we were profitable. There were probably very few Bitcoin miners that could say that they were profitable. We have assets on our balance sheet as well. And I just want to mention we are based in Vancouver, BC. We have our mining site in Christina Lake, which is in eastern BC. We've announced we're setting up another site outside of British Columbia, but within Canada, that uses hydropower. So when you look at our history, it's really a dual path. Initially, when we acquired Blockseer, we were focused on forensics. When we started our Bitcoin mining, we were focused on hosting. But we evolved over time, and we created this vision for having our own Bitcoin mining infrastructure, which we built in 2021 when we raised almost 100 million Canadian. And we also are in the process of building out the software and services to build an ecosystem that will show shortly that enables monetization of Bitcoin transactions. And the realization of this strategy we call Core and Core Plus. Core being the strategy around very cost-efficient Bitcoin mining, Core Plus around software and services that build on top of that Bitcoin mining. But to do this, we need to build an ecosystem. That ecosystem, in terms of Core Plus, is composed of a number of parts. First, if we're going to offer financial institutions the ability to place transactions on the Bitcoin blockchain in a carbon neutral way, we need a carbon neutral pool. And that pool is called Terra Pool. Terra Pool is the world's first carbon neutral pool. And our goal is to build that out, to create this supply of blocks that in turn can be filled with these unique transactions. We refer to this ability to manipulate how we create blocks as clean block mining, in part because we filter out bad actors, but we can also inject into the blocks transactions that are from known good parties that create lots of additional value. But to do this, we also need other pieces. We need a custodial wallet solution. Financial institutions hold their digital assets with custodian. And our goal is to be Canada's second qualified custodian. How we're going to do that is we created a spin-off subsidiary called Systemic Trust. It's currently wholly owned by DMG, but it's acting as a separate entity so it can go ahead and do what it needs to do to be successful. And it's headed by Lawrence Trong, who was Chief Compliance Officer at Tetra, Canada's only qualified custodian currently. And he was also CEO of Binance Canada. So he brings with himself and a team with the right pedigree to go execute this. He has the customer relationships. He has the regulatory relationships. And really, we're excited about the opportunity for what can be done and the time frame for realizing a vision to have a full service digital asset custodian that becomes a key piece of this ecosystem we're looking to build. And then the final piece is the exchanges. We're neutral when it comes to exchanges, but several years ago, DMG did invest in Bosonic, a Silicon Valley-based company that is focused on eliminating the counterparty risk, and that we see the relationship with Bosonic as a potential catalyst to help move the trust business, our trust business, to get them to move to market faster. So that becomes the final piece of what we need in terms of an ecosystem to realize this vision. And then when we look at the monetization opportunity, Bitcoin mining is essentially what we know that it's pulled back a little, but call it a $12 billion opportunity this year. And it's really based on the supply of new Bitcoin multiplied by the price of Bitcoin. Now, of course, transaction fees have been something that has been part of an interesting story where Bitcoin, the long-term vision that Satoshi had, that transaction fees would replace the block, what's called the block subsidy, which was just halved, would ultimately make this sustainable long-term. We hope that is the case, and we believe that all the new use cases with ordinals and runes and looking at the Bitcoin blockchain essentially as real estate that has value, and purchasing that real estate will drive the demand for that real estate will drive fees that in turn will make Bitcoin mining a very profitable business long term. We hope that is the case. But for us, where we're looking at the business, and we know with Bitcoin mining there are ups and downs, we know longer term, the real opportunity is below the surface of the water, using this iceberg analogy. And it's about what happens after the Bitcoin is created. And we've talked about some of these items, but really there's two revenue pools to be generated. First, from having a mining pool and the fees that are gained from that, and then holding and moving the Bitcoin through the qualified custodian. Just in terms of magnitude, we see this as longer term. This could become of similar size as our Bitcoin mining business, even as we continue to grow that. So let's go a little deeper. This is inside our mine. This is looking, and Christina Lake is in a beautiful part of eastern British Columbia, right near the US border. We were able to purchase this land for a very good price. It came with a building that we've utilized. That building right now houses 36 megawatts, total of 60 plus that we are building out. We also have a large lot that we're putting containerized Bitcoin mining onto. And we just announced that we've been energizing first miners of our new fleet. That's looking very promising, and we will essentially grow our capacity versus where it was the last couple quarters by about 70% by the end of this quarter. That is our target. And so that's a significant way to offset the halvening. And we also said we're going to do additional improvements to get us towards the 2 exahash. But the other part of the story with regards to Bitcoin mining is efficiency. So efficiency kind of also translates to what is your revenue per kilowatt hour. As you increase the efficiency, lower this number, you are able to generate more revenue for a given amount of power. So that's a powerful piece that helps offset the fact that the block subsidy just halved. And just to kind of help you understand, when you think about 28, Bitcoin miners talk about this joules per terahash. Another way to think about it, because this is just units, is megawatts per exahash. So for the exahash of mining, we're using 28.4 megawatts. For the same exahash, it's now, we said in our press release that with the build out will be at 23. So 1 exahash will utilize 23 megawatts of power. Now, of course, our target is to get to 1.7. So you just multiply that, and that's how much power we would be using, over 40 megawatts. But that at least gives you an idea how this math works. So if we're generating 70% more compute with a reduction of over 20% in our power bill, we're doing a good job to offset the halvening. Now you say, well, what about the rest of it? Now, what the dynamic that analysts have said is, as we go through this halvening, the wheat get weeded out, and they either drop off or they do like we do. We haven't decommissioned anything, but what we've done is utilize software to improve the efficiency of our legacy fleet. The give up is you give up hash rate, but you give up less hash rate for the amount of power you reduce. So we talked about 15% reduction in hash rate. It's over a 20% reduction in power. So I just want to make sure everyone understands this. I think when you look at other Bitcoin miners, this narrative will start to become part of what people talk about. We don't have a fixed power agreement, so we're not bound like some other Bitcoin miners may have take or pay agreements. We're not necessarily bound by that for our Christina Lake facility, but be aware that this is a knob that Bitcoin miners can turn, and we're turning it aggressively. But we're very cognizant of the timing of the halvening, and that's why we ordered equipment last year to be in place at the time of the halvening so we can offset. And we're very proud of what we're doing in terms of being able to be one of the survivors, not just survivor, but really to thrive in this post-halvening environment. And the other Bitcoin miners, assuming at least some of them do that, we should see a reduction in the overall network hash rate. At least that's what the analysts are talking about, a 15% reduction in the network hash rate. And what that would mean is for a given amount of compute, effectively, you'll get 15% more Bitcoin. So some miners will be weeded out, some will utilize the techniques we're utilizing, and that will get us, that hopefully gets the industry to a stable place longer term. I'll just run through the rest of the slides fairly quickly. Immersion cooling, that's a technology that essentially for us, we look at it as enabling greater capital efficiency because we're going to get longer useful life out of the equipment. You're utilizing a fluid to keep the miners cool, so you can run them at essentially at a wider range in terms of these power versus compute efficiency trade-offs. And our Core Plus, to look at how that ecosystem translates to products, think of the multiple layers here. On the bottom is core, the Bitcoin mining, and above it are these two lines here, Bitcoin blockchain infrastructure. So the software around pools and our Petra technology for inserting transactions, our wallet score technology for filtering out bad actors, additional wallet technology that we've utilized internally, as well as on top of it, we have applications with systemic trust really as the crown jewel here. That is the key piece that enables this vision of monetizing Bitcoin transactions, going through this infrastructure. TerraPool, we want to highlight, we are the first carbon neutral Bitcoin mining pool. And we believe that giving financial institutions choice to have their transactions to go through, to be placed on the Bitcoin blockchain, a carbon neutral way, will drive Bitcoin miners who are carbon neutral to want to join our pool. We also have a tool called Helm. This is for managing assets. So when you're on a pool, you can observe your miners. We want to give with Helm is a superior tool to what exists on the market for controlling miners, utilizing modern software techniques. We've analyzed the competition. We believe we can offer competitive advantage, and we believe we can save TerraPool members money by utilizing this tool. We use it currently internally. And with Petra, it's not just about financial institutions. DMG has placed the largest ordinals onto the Bitcoin blockchain, utilizing this capability. And because we control how we build blocks, we've been able to do these very large ordinals. And the protocol actually has a limit of 400 kilobytes. The block size is 4 megabytes. So there's 90% potentially more that can be placed onto the Bitcoin blockchain that an artist would want to do. And here you can see some examples, and we're working on having additional ones. There's some really exciting ones. We just had a couple meetings this week, and we're looking forward to being able to do more of this content. When you download the presentation, you click on the links, it'll take you to the actual block, so you can actually see the block as it's shown here. It'll take you to the ordinals.com website so you can see the content. Sheldon and I are here representing the management team. Just want to say about our board, we have a great diverse board. Heather has been with the company for many years, supporting us. Recently appointed as CFO, and she has great insight about the company. John Place is a legal expert, and JD, he's an investor like many of you in the audience. And finally, just want to show you some of our financials. As I mentioned, in our December quarter, we were profitable. As you can see, also our Bitcoin balance has been fairly steady, even as we raise capital. So we're proud of how essentially we manage our assets. We did raise from Sygnum Bank $8 million US of debt. That will show on our financials for the March quarter, which we expect to release by the end of May. And we would, so you would see that leverage, but we consider that really more of treasury management, because when we purchased the equipment, we did liquidate some Bitcoin to be able to purchase the 12.1 million US of equipment. But we also utilized the 8 million of the debt facility, and that allowed us not to sell Bitcoin at what is, even with the pullback, is a much lower price than where it is today. So we don't expect to go wild with debt, but we also we will continue to look to raise money to continue to fund growth. And so we've said we're going to be very careful when it comes to dilution. We think that dilution, we've seen a number of our peers do heavily dilute their stock, and we're really doing our best to avoid that. And with that, can end it here and take any questions.
I see you have your TSX-V listing. You're also the companion in Frankfurt. Is there any thought to, I guess, what's your capital market strategy? Is there any thought to coming to the U.S. and working away beyond the TSX-V listing?
Yeah, we think about that question. So the question was about the capital just uplisting to the NASDAQ or NYSE. We think about it every day. I mean, just how do we want to grow long term? One of the arguments for doing that is liquidity, as we talked about. We trade 1 million shares a day. So we know we have the liquidity. The issue is, are we missing out in terms of realizing value? And when we look at our valuation versus some of our peers, yes, we probably are missing out on some value for that. So we get it. But at the same time, we really want to be ready in terms of where we are, in terms of growing our market cap, executing pieces of the strategy that can really give us a tailwind. Often uplistings are associated with raising equity. If we do that, we want to raise equity in an environment where the stock has a lot of tailwind. And so that's kind of just summarizing how we're thinking about things. We do want to become a qualified custodian this year. So that's clearly one of the pieces that will drive it. In terms of realizing Core Plus strategy, growing the pool and growing other pieces, the ordinals business as well, that's a similar time frame. So you kind of, if we can demonstrate and execute on those pieces of the strategy, that in turn should give us enough tailwind, assuming favorable markets, to in turn consider an uplisting. Do you have one?
had two questions. Are there other coins that you could mine? There's Bitcoin in and this proof of stake model is a threat.
No, I mean, the Bitcoin protocol has been what it is 15 years. We had some modifications to that. So it's definitely not going to go down the line of proof of stake. We're not necessarily worried about it. Technically, we can mine other coins utilizing the existing infrastructure. Namecoin is one, but the revenue contribution from mining other coins, leveraging the infrastructure, is very small. We probably want to do that for other reasons, and it's just good to be able to utilize our assets as best as we can, but in terms of mining multiple coins. Now, that being said, we are looking at AI in multiple ways, and there are coins where the workload is essentially a GPU-based workload, so that may be a path as well. But that's still kind of more investigation stage. And when we get to a place where we're actually doing something, we can disclose that, but that would be another path for mining other kinds of coins. Are there any other questions? All right, well, with that, thank you very much. Really appreciate it.